Hello, finance enthusiasts! Welcome back to today's Finance News, your ultimate destination for the most critical, fast-breaking financial updates shaking up the United States markets. Today, we have three absolutely jam-packed updates about United States finance that hit the headlines just a few hours ago. From massive stock market shakeups and elite Wall Street bets to critical tax deadlines you cannot afford to miss, we are breaking it all down with deep dive analysis. If you want to keep your portfolio ahead of the curve and protect your hard-earned money, you do not want to miss a single second of this video. Before we dive into the data, if you are new to the channel, make sure to hit that like button and subscribe right now so you can stay permanently in the loop with our daily wealth-building coverage. Let us get straight into our first massive update. Wall Street's wildest gamble? Why SpaceX stock just sent shockwaves through the market. The post-honeymoon phase is officially here, and SpaceX stock has just entered what experts are calling a phase of pure civilizational faith. A massive flood of analyst initiations for SpaceX hit the market on Tuesday, exactly 16 trading days after Elon Musk's mega rocket, telecom, artificial intelligence, MEO cloud, and social media empire made its historic public debut. While the overwhelming majority of Wall Street institutions came out swinging with incredibly bullish outlooks, public market reality threw a sharp curveball. The stock plummeted by nearly 7%, closing below the critical $150 mark for the very first time since the highly anticipated SpaceX initial public offering. Investing in Elon Musk's grand visions has always required a healthy dose of faith, but with SpaceX now trading publicly, shareholders are being asked to believe like never before. According to analyst price targets tracked by Bloomberg, the average target for the stock sits at a staggering $236.45. That represents a massive 58% upside from Tuesday's closing price. But to get there, SpaceX has to clear some of the most mind-boggling operational hurdles in modern industrial history. According to intensive research notes, the company must first achieve flawless Starship reusability to make its entire launch ecosystem cost-effective. Second, they have to dramatically increase Starship payloads to maximize efficiency on every single mission. On top of that, they need to make Grok highly competitive following the closure of their Cursor acquisition, and somehow cost-effectively develop solar-powered data centers built directly in outer space. The sheer scale of capital required for this build-out is absolutely breathtaking. Adam Jonas of Morgan Stanley estimates that SpaceX will need to raise a mind-blowing $84 billion annually from 2027 through 2034. Meanwhile, Eric Sheridan of Goldman Sachs frames the challenge as needing to raise $270 billion of debt capital just between the years 2026 and 2030. All of this is aimed at building foundational infrastructure across transportation, connectivity, and artificial intelligence to make human life multiplanetary. The pure uncertainty of these goals has created wildly different forecasts on Wall Street. For instance, JP Morgan Chase projects an incredible 5,000 Starship launches by 2031, while the Royal Bank of Canada expects 2,440 launches by 2030. Yet, Elon Musk continues to bring out the preacher and the poet in even the most spreadsheet-minded number crunchers. Doug Anmuth from JP Morgan Chase stated that SpaceX's ambitions and potential impact on humanity are bigger than any company we have ever seen. Louis De Palma from William Blair noted that Musk has established himself as one of this generation's greatest innovators, carrying the torch for the United States industrial base. Edison Yu of Deutsche Bank went as far as to call SpaceX the apex of civilizational ambition, expressed in steel and fire. And in a true hold my beer moment, Brian Gesuale of Raymond James released a jaw-dropping $800 price target. Even with these intense capital demands, 12 out of the 17 initial public offering underwriters, including heavyweights like Goldman Sachs, Bank of America Corporation, and Citigroup, have slapped the equivalent of a buy rating on the stock. Skeptics from firms not involved in the listing, like Morningstar, gently call these valuations a bit fantastical. However, true believers only need to look at Tesla for historical context. Tesla went public at a meager $17 back on June 29, 2010, crashed to a low of about $1.30 a few months later, dragged along for years, and then completely exploded to the moon beginning in 2020. SpaceX investors might be on a non-linear, bumpy ride, but the upside potential is completely out of this world. Update 2. The Internal Revenue Service just opened a secret portal. Claim your massive pandemic cash refund before this urgent deadline. If you have not claimed your potential coronavirus disease-related tax refund yet, and you are terrified that you will not be able to file for it before the absolute drop-dead July 10th deadline, you have literally just been thrown a massive financial lifeline. The Internal Revenue Service has quietly added a game-changing electronic tool to its official website to allow instant electronic filings of the exact form necessary to claim this potential refund. Normally, Form 843, which is officially known as the Claim for Refund and Request for Abatement form, must be submitted strictly via paper mail or processed manually through a professional tax accountant. However, on July 1st, the Internal Revenue Service launched a special electronic filing window for this form, exclusively for claims related to this potential pandemic-era refund. You can find these mobile-friendly forms directly on the Internal Revenue Service website Forms page right now. Listen closely, because time is absolutely critical and running out fast. Tens of millions of everyday taxpayers may be legally entitled to thousands of dollars in refunds, or the total abatement of harsh penalties and interest that the Internal Revenue Service assessed during the nearly 3.5-year-long federal disaster period. This historic period stretched all the way from January 20th, 2020 through May 11th, 2023. But here is the ultimate catch. The single, solitary way to receive this financial relief is to file a formal claim by July 10th. If you miss this deadline by even 1 single second, you will forever lose your chance to receive a potential refund or abatement. Why exactly are United States taxpayers suddenly entitled to a giant tax refund? This explosive opportunity stems from a monumental federal judge ruling in the court case of Kwong versus United States late last year. The judge suggested that federal tax filing and payment deadlines were automatically suspended during that entire 3.5-year disaster window. Now, the government is actively appealing the ruling, but if the decision stands, millions of United States citizens who paid or were charged late fees and interest during those 3.5 years may be due a massive cash refund because everything was legally on hold. The Internal Revenue Service certainly is not advertising this heavily because they would rather not refund potentially billions of dollars to individuals, businesses, trusts, and estates. Independent national taxpayer advocate Aaron Collins, alongside top-tier law firms, has published urgent guidelines to help you figure out if you qualify. This ruling might even unlock older tax refunds, withholding, estimated tax payments, or recovery rebate credits for people who never filed original returns or need to file amended returns. Tax experts strongly advise filing what is called a protective claim right now via the new electronic tool to preserve your legal rights while the law remains unsettled. Missing the July 10th deadline permanently locks you out from money that belongs to you. So act immediately. Update 3. Jim Cramer's secret aerospace weapon. The brand new spin-off set to skyrocket right now. Moving on to our third and final massive update that just surfaced a few hours ago. Over the July 4th, 2026 weekend, consumer news and business channel financial guru Jim Cramer heavily covered his big buy call on AST SpaceMobile, calling it an incredible speculative play with a solid 2-year money-making window. But on Monday morning, July 7th, Cramer was right back on social media platform X with an even bigger recommendation for a massive aerospace powerhouse that is significantly closer to Earth. He explicitly told his followers that with Boeing and General Electric Aerospace completely taking off, it is time to buy up shares of Honeywell Aerospace. The stock had recently reversed after an incredible run, and Cramer firmly believes that out of all 3 pure-play aerospace names, Honeywell Aerospace holds the absolute most upside potential for your portfolio. Let us unpack the brilliant market logic behind Cramer's call. Honeywell Aerospace only began trading as a completely independent, standalone company on June 29, 2026, after completing its massive corporate spin-off from the parent Honeywell conglomerate. The stock recently closed a session at $237.70, down 3.82%, creating what Cramer recognizes as a prime buying opportunity before institutional investors fully wake up to this standalone thesis. You see, when a division gets spun off, old conglomerate shareholders who do not want pure aerospace exposure often dump their shares mechanically, creating temporary, artificial downward pressure on the stock price despite spectacular underlying fundamentals. And the fundamentals for Honeywell Aerospace are nothing short of breathtaking. We are talking about a company commanding a massive $78 billion market value with absolute record-breaking backlogs. Before the spin-off, this aerospace division was the ultimate golden goose for the parent conglomerate, generating an astonishing $15 billion in annual revenue back in 2024 alone by manufacturing top-tier aircraft engines, avionics, auxiliary power units, and advanced aviation systems. Chief Executive Officer Jim Cramer highlighted that they now have a purpose-built management team solely focused on one singular mission, rather than the messy, scattered goals of a multi-industry conglomerate. Right now, Honeywell Aerospace holds massive, record-breaking backlog orders from both Airbus and Boeing, putting them squarely at the center of the global aviation recovery and the booming defense spending cycle. Looking at the official numbers, the corporate projections for the second half of 2026 alone call for an adjusted earnings before interest, taxes, depreciation, and amortization of $4.65 billion to $4.75 billion, alongside a massive free cash flow of $1 billion to $1.5 billion. Wall Street brokerages are forecasting an adjusted 2026 earnings per share of $8.34. By the year 2030, Honeywell Aerospace is targeting a blistering 6% to 8% organic annual sales growth, 9% annual earnings growth, and a minimum of $6.5 billion in annual net earnings. Cramer is giving you the golden window to buy the dip before the broader market prices in this epic growth story. There you have it, finance enthusiasts. 3 massive, market-moving updates hitting the United States financial landscape right now. From the high-stakes gamble of SpaceX's public market debut to the urgent Internal Revenue Service pandemic tax refund lifeline ending on July 10th, all the way to Jim Cramer's high-conviction buy alert on Honeywell Aerospace, the markets are moving faster than ever. Make sure you take immediate action on these insights to safeguard your wealth and maximize your returns. Thank you so much for tuning in to today's finance news. If you found this deep dive breakdown valuable, please smash that like button, Drop a comment below with your thoughts on these updates, and hit subscribe with notifications turned on so you never miss our daily wealth-building videos. Keep your eyes on the numbers, stay smart with your capital, and we will see you right back here in the next video. Goodbye.